Welcome to today's deep dive. We're going to be taking a close look at Vedanta Ltd, this Indian natural resources company that everyone's talking about after their stock price jumped 85%
Yeah, that's a big jump.
in the past year.
It is.
You sent us a ton of information on them, financial statements, auditor reports, even a stock analysis.
Oh, wow.
And, well, we're here to help you figure out if this is the start of something big,
Yeah.
or just a temporary blip. What do you think?
Well, it's interesting because Vedanta isn't just focused on one thing.
Right.
They do it all,
Yeah.
from exploring and extracting minerals to processing oil and gas.
Wow.
I mean, we're talking zinc, lead, silver, copper, aluminum, you name it.
It's impressive.
And then on top of that, they've got their hands in power generation, steel manufacturing, even running ports.
Okay, so they're diversified.
Very much so.
But before we get too excited about this 85% stock price jump, let's look at their financials.
Okay.
Would you say their profit growth has been a bit of a roller coaster? It has been a bit up and down.
Yeah, 109% profit growth, TTM.
Trailing 12 months.
Exactly.
But then a 33% drop over the past 3 years.
That's a big swing.
It is, and that kind of volatility can make some investors nervous.
For sure.
It's important to remember that TTM...
It's trailing 12 months.
Yeah, basically means we're only looking at the past 12 months of data, like a snapshot, not the whole movie.
Right.
And for Vedanta, that snapshot shows some pretty dramatic swings.
Yeah, I see that.
This isn't unusual for companies tied to commodity prices, though.
Oh, because commodity prices.
They can go up and down like a yo-yo.
That's true.
But it does mean that investors need to be prepared for those ups and downs.
Yeah, you got to have a strong stomach.
Exactly.
And there's another thing that kind of jumped out at me.
Oh.
The promoters have pledged 100% of their holdings. Does that raise any concerns about their, long-term financial health?
It's definitely something worth looking into.
Yeah.
Pledging shares basically means using them as collateral for loans. Oh, I see.
Could be a strategic move.
Right.
But it's also mean that the company is facing some financial pressure.
Okay.
Now, to balance that out, though, they have been consistently paying out dividends.
Yeah, and pretty hefty ones, too, at 235%.
Right. That might be attractive to income-focused investors.
Makes sense.
But, as always, we need to look at the whole picture.
Speaking of the whole picture, let's talk about this massive demerger they've got planned.
Oh, yeah?
Splitting it to 6 different companies.
6, wow.
Aluminum, merchant power, oil and gas, base metals, iron ore, and then everything else.
Huge move.
It is. Do you think it will truly unlock value, or is it more about restructuring to, I don't know, sidestep some of those tax challenges we were talking about?
Well, that's the million-dollar question, isn't it?
It is.
On the surface, it does look like they're trying to streamline their operations.
Okay.
Make themselves more attractive to investors.
Mm-hmm.
Imagine taking a giant pizza and cutting it up.
Right.
Each slice might be more appealing to different people. It could also help them navigate that complex Indian regulatory landscape,
Yeah.
potentially making it easier to deal with things like taxes and permits.
But cutting up the pizza also means you have to manage 6 different kitchens, right?
You do?
Won't there be some disruptions during the transition?
Oh, there will definitely be challenges.
And what about having to set up separate management teams for each company?
You're right, that's no small feat.
Seems like a recipe for chaos.
Well, they do still need final approval from the National Company Law Tribunal.
Oh, right. So there are still some hoops to jump through.
Exactly.
So while this demerger holds promise, it's not a guaranteed success.
Definitely not.
All right, let's put on our detective hats for a minute
Okay.
and look into this impairment reversal of a whopping 2,358 crore
Oh, yeah.
on their Rajasthan oil and gas block.
Big numbers.
They are, now for those who aren't familiar with all the accounting jargon,
Right.
impairment's basically like when you realize that old car you're trying to fill isn't worth as much as you thought.
Makes sense.
So what happened here? Did they suddenly discover an oil field was a gold mine in disguise?
Not quite a gold mine,
Okay.
but they have started using some new techniques to get more oil out of that field.
Ooh.
Specifically, it's called alkaline surfactant polymer flooding.
Wow.
It's a mouthful, I know.
It is.
But basically, it's a way to get more oil out of the ground.
Okay.
And it seems to be working.
So they're getting more oil. Good news.
Yeah.
But are we just supposed to take their word for it that the asset is suddenly worth so much more?
That's where the auditor reports come in.
Okay, yeah.
They're like the independent watchdogs,
Gotcha.
making sure everything is on the up and up.
Mm-hmm.
In this case, they've said that Vedanta has updated its assumptions on things like the price of oil,
Right.
the discount rate, and the tax rate.
Okay.
Think of these as ingredients in their valuation recipe.
I like that analogy.
Any of those ingredients are off.
The dish won't taste right.
Exactly.
So it's not just about trusting Vedanta, it's about understanding the underlying assumptions?
Exactly.
Okay, so we're looking at a company with some impressive growth, but also some red flags and a massive restructuring.
Yeah, it's a lot to take in.
It is. Sounds like they're juggling a lot of balls in the air right now.
Oh, and we haven't even gotten to their tax situation yet.
Oh, boy.
Buckle up, because that's a whole other layer of complexity we need to unravel.
All right, lead the way. Let's see what skeletons are hiding in Vedanta's tax closet.
Let's do it.
Okay, so we've established that Vedanta's financials are, well,
Compliment.
there's one word for it.
Yeah.
Let's try to make sense of it all, starting with their tax situation.
Right.
You mentioned a tax closet full of skeletons. What did you mean by that?
Well, there's that massive 9,545 crore tax demand from the Indian government.
Yeah, I saw that.
It's related to profit sharing in their Rajasthan oil block.
Right.
It's been going on for years.
It has. And to add to the drama, the government just came back with a new calculation.
Oh, really?
Yeah, they're saying Vedanta owes a whopping US $224 million.
Wow, so it's not over yet.
Not even close. Vedanta's pushing back, saying the government's math doesn't line up with the tribunal's clarification.
This really shows the kind of headache companies face when operating in different countries.
It does, especially when it comes to taxes.
Exactly. Every country has its own rules, interpretations, and, let's be honest, loopholes.
And to make things even more interesting, Vedanta just opted for a new tax regime in India.
Did they?
Yeah, they're going with a lower corporate tax rate, 22% instead of the previous 30%.
So they're playing tax chess, huh?
It seems that way. Any thoughts on their strategy there?
Well, it's probably tied to the whole demerger thing, right?
Could be.
By choosing this lower tax rate, they're trying to reduce their overall tax burden,
Smart move.
especially with all the upcoming changes.
And the impact is significant.
It is. Their net tax charge for the financial year 2022-23 was 1,635 crore lower.
That's a lot of money.
It is. Imagine what you could do with an extra billion rupees.
I'm sure they have plenty of ideas. But all these tax changes and disputes make it hard to track their financial performance, right?
It does make things more complicated.
Yeah, it's like comparing apples and oranges.
Exactly. You can't just look at the numbers at face value. You have to adjust for these changes.
So what about their subsidiaries?
The businesses they're planning to spin off.
Right. We need to look at how they're doing individually.
We do. It's like judging a sports team. You can't just look at the overall record.
Exactly. You need to see how each player is performing.
And in Vedanta's case, some players are definitely shining brighter than others.
Like who?
Well, there's Hindustan Zinc Ltd.
Okay. Yeah, I've heard of them.
They're one of the world's largest zinc-lead miners.
Impressive.
They've been contributing a lot to Vedanta's profits.
But I've also heard they've had their own tax issues.
They have, which adds a layer of risk, of course.
Right. So even the star players have weaknesses.
It seems so.
What about Bharat Aluminium Company Limited?
Belco.
Yeah, Belco. They're a big aluminum producer in India, right?
That's right.
But I've heard they've been struggling a bit.
Yeah, they've had some operational challenges.
What kind of challenges?
Well, their profitability has been declining.
Oh, I see.
And the audit reports suggest they need to, improve their operations.
So they need to step up their game.
Exactly.
What about Korea and India Holdings Limited?
Their oil and gas arm.
Yeah, they've been in the news lately because of those huge dividend payouts.
Ah, yes. Those have raised some eyebrows for sure.
They have. Do you think it's putting a strain on their ability to invest in future growth?
Well, those big payouts have definitely made some analysts wonder if they're sacrificing long-term growth for those short-term gains.
Makes sense.
There's even been talk of a Care and India share buyback, which could further impact Vedanta's cash flow.
So you've got star players, struggling players, and players who might be partying a little too hard.
It's a mixed bag.
It is. Sounds like managing this team of subsidiaries is going to be tough, especially with this demerger coming up.
You're not wrong.
And we can't forget about the bigger picture.
You mean like how they're competing with global giants?
Exactly. Companies like BHP, Rio Tinto, and ExxonMobil.
Those are some big names.
They are. It's like David versus Goliath.
It is, but Vedanta does have some advantages.
Like what?
Well, their production costs in India are relatively low.
That's true.
It's like having a home field advantage.
And they've got that diversified portfolio we were talking about.
Exactly. It helps to spread the risk.
But diversification can only take you so far.
True.
What about the challenges they face, like navigating the complex regulatory environment in India?
That's a big one.
We've already seen how that can lead to those tax disputes.
Yeah, and then there's their dependence on commodity prices, which can be so unpredictable.
So it's a mixed bag. They've got some pluses, but definitely some hurdles to overcome.
Get it.
And we can't ignore the elephant in the room.
ESG.
Exactly. It's not just about profits anymore.
Right. Investors are paying more attention to environmental and social impact these days.
And Vedanta's been criticized for their environmental practices in the past.
They have. So the question is, how are they responding to that?
Well, they are making some efforts to improve.
Like what?
They've set targets for reducing carbon emissions, investing in renewable energy, and working more closely with local communities.
Those are all good steps.
But are they doing enough?
That's the big question. Are these genuine efforts or just for show?
I guess time will tell.
It will.
Let's shift gears a bit and think bigger picture. What are the big trends shaping their future?
Well, one major trend is the growing demand for metals and minerals worldwide.
Oh, because of things like urbanization and infrastructure development.
Exactly. And the move toward a low-carbon economy.
Makes sense. All those electric vehicles and solar panels need a lot of resources.
They do.
Sounds like Vedanta's in the right place at the right time.
It does, but there are also some counter trends to watch out for.
Oh, like what?
Well, resource nationalism is on the rise. Governments want more control over their natural resources,
Oh, I see.
which can make things tricky for companies like Vedanta operating in multiple countries.
Makes sense.
And there's also a growing focus on responsible sourcing and transparency in supply chains.
Because consumers are more aware of where their products are coming from.
Exactly. They want companies to be ethical and sustainable.
So how does Vedanta navigate all of this? What are their options?
Well, one option is to double down on their India operations.
Where they have that home field advantage.
Right, and a more familiar regulatory landscape.
What else could they do?
Another possibility is to expand their downstream operations, go beyond just extracting raw materials.
Oh, you mean move into manufacturing and processing?
Exactly, capture more value from the entire supply chain.
Like a chef opening their own restaurant.
Exactly.
But no matter what they do, they've got to keep improving on that ESG front.
No question about it, investors and consumers are watching.
Okay, so we've talked about the risks, the challenges, the trends.
It's a complex picture.
It is, but before we get to the final takeaway, anything that stood out to you? Any surprises?
Well, I think it's important to remember that this is just a starting point.
Right. There's always more to uncover.
Exactly. But I hope this deep dive has given you a better understanding of Vedanta's story.
Their potential and their challenges.
Exactly.
We've been through a lot with Vedanta Ltd. today.
We have their financials, the demerger, their ESG performance.
It's a lot to digest.
Definitely.
So what does it all mean for investors? Should they buy Vedanta stock or stay away?
That's the question everyone wants answered.
It is, but there's no easy answer.
There isn't. It really comes down to each individual investor.
Right. Their goals, their risk tolerance.
Exactly. And their investment time frame.
But we can give them some things to think about, right?
We can, if you're looking for a company with potential for high growth.
And a history of good dividends.
Vedanta might be a good fit.
But you gotta be okay with the risks.
Especially the uncertainty around the demerger.
And how that might impact their financials. And those pledged promoter holdings, those always make me nervous.
I get it. It's like a warning sign.
It is. You have to understand why those shares are pledged.
And what it means for the company's future.
And of course, you can't ignore their ESG performance.
Right. Does it align with your values as an investor?
If you're looking for a company with a perfect track record on environmental and social issues,
Vedanta might not be the right choice.
but they are trying to improve.
They are. Those investments in renewable energy and community programs are positive steps.
So let's look at the other side of the coin. What could make Vedanta's stock price go up?
Well, if they pull off this demerger successfully.
You mean splitting into those 6 separate companies?
Exactly. If those new companies can thrive and create value.
That could attract new investors.
It could, and that could boost the stock price.
And what about commodity prices? Could those help?
Absolutely. If demand for things like zinc, aluminum, or oil goes up,
Vedanta would benefit.
for sure, their revenues and profits would increase.
Making the stock more attractive?
Exactly.
But things could also go the other way, right?
Oh, definitely.
What are some of the risks that could send the stock price down?
Well, if the demerger goes badly.
Like if those new companies struggle?
Exactly. That could hurt shareholder value.
And commodity prices are always unpredictable,
They are. If those prices drop, Vedanta's profits could take a hit.
making it harder to pay off their debts.
Exactly.
And we can't forget about the risk of some kind of environmental or social controversy.
Right. A major incident could really damage their reputation.
And scare away investors.
No question about it.
So, as we wrap up this deep dive, one final thought.
Yeah.
The world is changing.
It is.
The demand for resources is growing, but so are the expectations for responsible business practices.
Sure.
The question is, can Vedanta adapt and thrive in this new world?
Can they embrace innovation and sustainability?
Or will they get left behind?
It's something for investors to consider carefully.
We hope this deep dive has given you some food for thought, some insights to help you make your own informed decisions.
That's what we're here for.
Remember, investing is a journey.
It is.
Do your research, stay informed, and never stop learning.
Couldn't have said it better myself.
Thanks for joining us on this deep dive into Vedanta Ltd.